Hey, welcome back. With the stock recently reaching new all-time highs, a lot of growth lately and even more potential, Microsoft has been a very good investment so far. They offer a variety of digital products from cloud, the Office package, Windows, Xbox, LinkedIn and so on. Now, with the development of AI, they seem to have unlocked a new cycle of growth, so let's take a deeper look into Microsoft. They reported very nice double-digit increases in revenue and profit, which is very impressive given the company's size. They can produce a cash flow of around 70 billion, which for a market cap of 3 trillion is a ratio of roughly 43. So that's high even for Microsoft, but let's see if there is a reason other than the hype around AI. To be clear, AI has a lot of potential, but in some cases, the market seems to have very unrealistic expectations. The company has 147 billion in current assets, which is enough to cover the current liabilities. They almost cover the total liabilities, leaving you with 253 billion in equity. So they are very similar to companies like Apple or Alphabet, which also have a very good balance sheet. They pay a very small 0.7% dividend and buy back a similar amount of shares. That's the issue with such a high valuation. They pay 60-70% of the cash flow, but in total that's a return of like 1.5%. If they invested it or paid back the debt instead of paying a meaningless dividend or doing buybacks at all-time highs, this could have been a much better company. I think this is a very questionable choice from the management. Imagine what 40 or 45 billion per year can buy them. If anything, if they cut the dividend or buybacks, that would be a positive sign for me. But then the 10 billion per year they pay in stock-based compensation might lose its value. Yes, they invest a lot, but 40 billion can buy them massive companies every year if they want to. Again, cutting the dividend and buybacks even in half can unlock a lot of untapped potential. We can see them investing quite a bit in AI, cloud and other technologies to support the demand, and this type of investments are basically what fuels the company's growth. But again, my issue is that this may not be enough for such a huge company. I'm sure you know about all the investments in AI, and what I want to mention here is that given the type of products that they sell, this has a lot of potential. Think about the potential to integrate it even further in Windows, Bing, all the Office apps and so on. This would make their market leader position even stronger because it's going to be even more difficult to compete against them. Now, is it enough to justify such a high valuation? They bought Activision Blizzard recently for about 70 billion, and this adds a lot of potential to Xbox. It also opens a whole other industry, PC gaming, and in the future they can use or rent the IPs for movies and series. This is where the added value is for you as a shareholder, because buying it for 30-something times the cash flow wasn't a value pick. And this gets me back to the dividend. Instead of paying you a very negligible dividend or the buybacks, wouldn't you prefer them to buy Warner Bros. For example and compete with Netflix and Disney Plus with a lot of valuable IPs? And that's 1 year, imagine what they can do in 5. So they are getting to this point where they can be like Amazon with Prime, which is a perfect example of synergies. If they do it right, they can integrate parts of the business together, which would help each other grow and also make them more competitive. Think about Amazon Prime, for example. With Prime, you get benefits on Amazon directly, but you can also get basically a Netflix subscription or games or pharma discounts, free delivery and so on. They can be like Prime, but also with a bigger focus on companies. Now, with such a big company, there is high competition from many directions. They have to compete with other huge companies like Amazon, Alphabet, Apple, Alibaba, Sony, IBM and so on. But this competition has been high for a very long time, so the fact that they managed to grow and keep a strong market position is something to keep in mind. Plus, getting to such a big size can attract various political issues. You probably remember all the talk about splitting the big tech companies or special taxes and stuff like that. We saw even with the Activision transaction that if they want to buy such a big company, it's going to take a lot of approvals and especially time. Plus, for example, China has been replacing Windows for government PCs, and if they don't improve from a security point of view, they risk having other countries following China. I remember Germany having some similar issues with Microsoft a few years ago, so it can happen anywhere. Now let's get into a valuation with the usual 3 scenarios. In a bad one, with competition and political issues affecting the company, let's assume they stabilize at around 60 billion. If the market is trading them at, let's say, 20 times the cash flow, which is relatively high but normal for big tech, that's a market cap of 1.2 trillion. That's a price of 161.68 for a roughly 60% loss. So based on this, we can see that the market is much more optimistic. Now, there is AI and potential, but is it justified? In a second scenario, let's say they grow to 90 billion in half a decade, which is a decent growth rate of around 7.8%. For a ratio of 25, that's 2.25 trillion, meaning a price of 303. Even that is a 25-30% loss, so the market is even more optimistic. The issue is, what if there is a recession or some political issues or they just don't grow that much? 25 is, relatively speaking, a very high ratio. Now, in a good scenario with a lot of growth thanks to AI, let's say they grow to 120 billion in half a decade, meaning a pretty high growth rate of around 15.9%. For a ratio of 30, that's a market cap of 3.6 trillion, meaning a price of 485. That's a 15-20% profit, which is not an attractive upside. So the current price is not very far from such a scenario, and I'd say the market is pretty optimistic. I think there is a bit too much hype around AI. Sure, they can pay a better dividend at that point, but it wouldn't be that good. Obviously, they can make more or less, but I think they should be a pretty good indicator and they aren't some crazy growth estimations. They can do well, but I don't see them making like 200 billion in less than a decade unless they reinvent something about the business. Given the potential to grow, I'd say that maybe something like 200 or 250 would be a good price for me. So overall, Microsoft is a good and very profitable company with potential to grow. They have nice financials like many of the big blue chip tech stocks, but my issue is the price. The potential growth doesn't justify paying like 50 times the cash flow. Yes, there is a lot of potential, but do you think the cash flow can like triple to justify the price? Is it a better buy than Alphabet? I don't think so. They make a similar amount of money, but Alphabet is 30-40% cheaper. They both have potential to grow, especially with integrating AI in the products they sell, so I don't see a reason to buy it over Alphabet now when the price is so high. Sure, if it crashes or in a recession or something, it might become interesting, but right now I think this is AI hype and fear of missing out. There are so many other good investments out there at much better prices today that I wouldn't see myself buying this. It's a good company, don't get me wrong, but there is a difference between the business and the stock. You know, Tesla is also a nice company, but maybe for a tenth of the price. Can you still make money with that? Yes, but not thanks to fundamentals and with zero margin of safety and a very high risk of permanent loss. But ultimately, this is about why you invest and the risk reward you are willing to take. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out and make sure to subscribe. Thank you for watching and I'll see you next time.